I want to ask you about your conversations with the CMA on the approvals from Asda. What's the latest thinking over at the Sainsbury's HQ about the number of stores that you're going to have to unload to get this deal done?
Well, as you know, we're in the phase 2 part of that investigation with the CMA, looking at all the details of the proposed transaction. They've issued a timetable noting that they'll give provisional findings in January. So we await those provisional findings, and we wouldn't want to second guess what the CMA will conclude, but we're working very closely and constructively with them on what we think is a great deal for UK consumers.
Kevin, is there a critical juncture at which you would say to yourself, if the CMA force us to close X% of these stores, this deal wouldn't make sense for us? Is there any guidance you can give us in terms of a breaking point for you, a red line for Sainsbury's?
Unfortunately, we can't give guidance on that, but of course in any deal there's going to be one of those lines, as you say. We've spent a lot of time working on this. We wouldn't have proposed the deal if we hadn't felt that it was a deal that could be executed, but of course we await the CMA's conclusion. And the reason we're very positive about the deal is it's very good for UK consumers because we can reduce prices for UK consumers. It's good broadly for the UK economy. You create a very strong business that contributes a lot to the exchequer from a tax point of view, good for our employees and good for our suppliers who can grow with the business.
Let's talk about Brexit. Manna's brought up the subject of red lines, which takes us nicely to a Brexit conversation, doesn't it, Kevin? What are you doing to prepare for a no-deal Brexit? Paint a picture of what no deal would look like for Sainsbury's.
Well, we're watching the position very carefully, as you can imagine. We have teams working on various scenarios, as I think every business in the UK and many businesses in Europe will be doing right now. It's very important that there is a sensible deal from a food point of view for the food industry, because about 30% of the products that we sell, and that wouldn't be different in many retailers, food products come from continental Europe. So a sensible means of getting product across the border would be very good for our UK customers, but also, of course, for our good European suppliers. So watching it closely and clearly get a sense that things are moving forward at the moment, and we hope that's true.
OK, so you hope for there to be a deal, Kevin. How inflationary would it be if we saw no deal? Have you done any work on this? And I ask this because Tim Martin, the chairman of Wetherspoons, yesterday said that the public had been given a dishonest and surreal campaign to persuade them that food prices will rise without a deal. He says that's the opposite of the truth. From a Sainsbury's perspective, would no deal be inflationary for the UK?
It would certainly have an impact, that is true. Because you would have a different tariff arrangement, and that would have an impact. So I think to say that it would have no impact wouldn't be correct. Difficult to quantify because there are different tariffs for different products, etc., and it would depend on the sort of mix of imports. But we think it would have an impact, and hence we feel that a deal would be the best outcome for our customers.
Kevin, let's circle back to the business in hand. Just looking at the Kantar data, your grocery sales through to October the 7th, in those 12 weeks, you were perhaps the slowest growth amongst the big four of the grocers. How tough is it at the moment in your grocery space? Are you losing market share? Are you discounting? Give us a complexion of what's going on there.
It's very competitive in the market in the market at the moment. As you know, the discounters are putting down a lot of space, so that's adding more space into what's already a very busy market. We're pleased with the performance of our food business in the first half. We had served more customers than ever before. We grew areas like our Taste the Difference and our own brand ranges in both volume and value. We improved our relative price position. We inflated the least in the market. That means we raised prices the least relative to other grocers in the market. So we're pleased with our food performance, but there's no doubt it's a competitive market.
Can you tell me what you make of this? We're chatting to some of the analysts yesterday in the BI team, and they said, look, you're moving, their perception is that you're moving some of the Argos brand in-store to Sainsbury's, and they see that perhaps as a strange step, and they're surprised that you're not going much more with digital with that. You're moving physical into physical and perhaps not seeing the sufficient acceleration online as we saw going head-to-head with Amazon. What's your riposte to that supposition?
Well, we're seeing a huge move online. 20% of the sales in the group in the first half started online. 60% of Argos sales start online, and most of that on mobile. So only 40% of Argos sales are actually people walking in off the street and we didn't know they were coming, we didn't know what they were going to buy. 60% they've either ordered it and are picking it up on mobile, or they've ordered it and they're having it delivered. Moving the stores inside Sainsbury's is just great for customers, because we've got 26 million people come to buy their food in Sainsbury's every week, and of course offering them a broad range of general merchandise products, which Argos have at the same time, is proving very successful. And what we're finding is we're getting very strong like-for-likes in the stores. As we put an Argos inside the Sainsbury's stores, they're growing very strongly in the first year, in the second year, and even in the third year. So it's working very well for customers.
So that's the strategy, Kevin, with regards to those two businesses. But the relationship, looking further ahead, I suppose, with the consumer, you're very mindful of what's going on with Brexit. So if I could just return to that topic for a moment, what would you like to hear from the government now? You want a deal, you've made that clear. What would you like to hear from the government with regards to Brexit? Do you need to hear more about the no-deal preparations that the government is making?
We're all working on no deal preparations, and we're clear the government is working on no deal preparations. But I think our focus, and you know, our sense is the focus of government is really on getting a deal, and the importance there is just the amount of food that comes from continental Europe into the UK. As I said, it's important for not only our consumers but also our suppliers that we have a sensible supply chain, because most of this product is fresh and it can't sit at borders for many days.
Kevin, can I just finally close off with one last Brexit question? By the time Anna and I speak to you again, we will be in the midst of it. Have you materially changed the supply chain? Is there a demonstrable change in the supply chain to on land in UK versus overseas? What can you tell us in that regard? Sainsbury's has always endeavoured to buy everything that we can from UK suppliers. So we're already buying, you know, wherever possible we buy from UK suppliers. There are just some products, clearly because of seasons, because of temperature and climate, that you can't buy in the UK. So whatever we can buy, we've been buying in the UK for some time, and clearly that gets a lot of focus. But you know, there's some fairly obvious products that we can't do that. So we're looking at the supply chain of those products coming into the country, particularly from continental Europe, and making contingency plans around that. But the pragmatist in me would say that you know, a deal will be done because it's good for both our European suppliers and for UK consumers, and that's what we're looking for, I guess.